Good day, everyone. This is Patrick from EasyFX Code Trading System, and this is Saturday, the 2nd of December, 2023, and this is the weekly technical analysis for spot gold and dollar yen for the first week of December. And spot gold has made a very strong push up higher to test the recent year's high, and which was an all-time high, but did not reach the ultimate level yet. After breaking through right from the start of the week above this previous swing high. So that's at the expense of the US dollar, which did manage to recover midweek. However, the markets are on a tear with the expectation that the Fed may pause and start looking ahead for next year's rate cuts, and maybe aggressive rate cuts with the possible slowdown in the inflation rate. So at the same time, the US dollar has, although it recovered for the DXY, but the dollar against the Japanese yen has continued to dip lower and continued its retracement. So with a strong bearish close on the Friday. So let's review the news triggers from last week, and then take a look ahead for this coming week with jobs report coming at the end of the week. Last week for the Australian and Eurozone CPI data, both economies came in with lower than expected figures, so raising hopes at least for the short term that the RBA may just pause and hold rate steady after their previous hike last month, and as well as the Eurozone, where it has also significantly dropped and also possibly could influence the ECB to also pause and try to project the next potential rate cut for next year. Similarly, for the US, the core PCE price index has remained fairly constant over the last few months, between 0.2 and 0.3%. And this is still a concern for inflation. However, the rest of the indicators for the economy is not so good, with the ISM figures lower than expected, and especially manufacturing still contracting even with low forecast. Although the GDP figure was slightly higher than expected, so let's see what the final figure will be towards the end of this month. So this coming week, we have the RBA with their rate decision, and expected to hold rates as it is after the previous month's increase. And there is services figures coming up. With forecast of slightly higher than the previous month's actual. So this could be in line with the GDP, but we'll see. And forecast for the non-farm payroll, the jobs figures also higher than the previous month's actual, which was significantly lower, which was a surprise. So we'll see if it's going to meet that or market is not expecting to do too well with the recent news on the economy. So should not expect it to be over 200K. Right, so this week we'll see how the US dollar responds, because it did dip and managed to recover. So we'll take a look at that on the DXY. Right, so critical week coming up, one week, couple of weeks before the Fed's meeting in the middle of the month, and starting off with the RBA. All right, let's move back to the analysis. Let's begin with spot gold, where the all-time high, which was reached earlier in the year at 2880. It did test the previous high of 2075, and that was the close just below that, and hit the high 2075.36. Also on Friday, we were strong bullish close, only a small pullback from the 2050. After hitting that pullback, pause, and then pull back on the Thursday, and then a strong continuation move on the Friday. Test the to test this year's high, or almost attempted to reach this year's high. So we'll see. It's only close at 71, so it's only about $9, 90 pips to go. Not very far. It's trying to reach 2087, if that's the 200 pip extension. And if we take a look on the weekly time frame, you can see that's a strong bullish close, and attempting to reach that high where it was quickly rejected. So this time it looks like it's very strong bullish momentum, so there could be possible follow through after a pullback. Let's see how much the pullback is going to be. It may, if it's strong, it may not even reach 2050, and probably just at the 162 pip before it pushes up to the 200 pip area. Okay. So we'll leave the fib as it is, and see whether this week is able to reach that with the US dollar index also recovering. However, both of these can still go up together as well. So US news this week is a minor one with the services, and then the key one for the jobs at the end of the week. So let's see whether this fib reversal will bring the price really right to the 200 pip, and that's at 2087 exactly. Yeah, I don't think we need to adjust the fib at the moment. All right, so let's compare this with the US dollar index, which may not be directly inversely correlated as much as the euro dollar. And here's the US dollar index, where it did dip lower past the initial support zone at the swing low, the 100 pip swing low here. And almost reached the next support zone just above the 102 before managing to find support even after a gap down lower, managed to climb back up to test the swing low, and then recovered on the Thursday, and largely due to euro weakness more so than the dollar strength because of the eurozone CPI data. And then another gap down lower on the Friday and attempt to climb up higher, but stall and just consolidated under the 103 level for the week. So this week is a key one with more data from the US before the Fed's meeting in the middle of the month, and there's ISM services, and then Friday's jobs report, and looks like managed to recover to almost climb back up to the start of the week. Let's take a look at the weekly time frame. And it's a long wick, long lower wick, and pushed up higher to close with not quite a doji, but small body spinning top, still below the 102. So there could be some follow through on the bullish momentum to climb back up, but it's going to just attempt to retest the weekly 55 EMA, where the 786 fib is. So let's move the interim support to the swing low at the 100 fib. Let's take this one out. Support is still at the 102. Interim resistance now is at the between the 104, and below that the daily 200 EMA, and right above that is the significant resistance at the 62 fib and the 55 EMA. So let's see if it's just going to consolidate for this week, or whether it's able to break out higher, at least to test the daily 200 EMA. And to see if there's also follow through with the inverse correlation with the euro. So the euro will need to sink lower in order for the US dollar to climb up and recover. Okay, so key news week for the US dollar, and we'll have to watch the price action between the euro and the US dollar index, as well as spot gold, which has also retested the year's high and the all-time close to the all-time high. All right, let's move back to the other pairs. Moving on to the dollar against Japanese yen, where after last week's bounce to recover and retest the breakout or breakdown zone level of the lower channel trend line, it slowly but surely fell on a Monday below the daily 55 EMA. And from the 149 fell all the way down to 147. Attempted to bounce back on Thursday with the US dollar recovering from the with help of euro dollar weakness. But then on the Friday, it's fell even further, different from the close for the DXY. So this time it closed below the 147, and with this bearish momentum, it's likely to continue down to 146, and perhaps even back down to the swing high at the 100 pip, just at the 145 round figure. And that's the swing high where it broke out higher for a couple of months, and then now retracing its movement back to where it broke out from. And that's the 100 pip there. So we'll leave the fib as it is. Bring this support zone down. Fib, and perhaps even this next support level at the daily 200 and the 786. That could be another major support level. Interim resistance will be back up at the 138. And major resistance now at the 149 and the daily 55 EMA. Okay, we take a look again at the weekly time frame. We'll see how bearish that momentum is. It's quite different from the US dollar index. So this could be further bearish momentum. And then consolidation. So all this before the Fed's meeting in the middle of the month. So let's see how the US dollar price action is for this week, and compare that with the dollar against Japanese yen. And watch out for these couple of news for this coming week. All right, so do check out my other videos on the major pairs, and have a safe week and a good trading week, and cheers for now.